Hello, my name is Andrew Pang. Welcome to another edition of CMS Forex News. Today's Friday, August 15, 2008. In New Zealand, retail sales for June surprised forecasts on the upside and increased 0.9%. Expectations had been for a 1.6% decline. That's welcoming news for the New Zealand economy, as the central bank has embarked on a rate-cutting campaign in the face of falling demand. With the Reserve Bank of Australia gearing up for its own rate cuts, the Aussie-Kiwi pair fell sharply in today's trading following the better-than-expected sales data out of New Zealand. The Kiwi surged in the hours after the release, consolidated near 1.24, and capped off its 180-pip rally in New York trading. The pair is now about 360 pips lower for the week. U.S. industrial production output increased 0.2% in July, a slower pace than June, but better than expectations. The capacity utilization rate, the proportion of factories in use, increased to 79.9% from June's downwardly revised figure. The Empire State Manufacturing Index indicates that conditions for New York manufacturers improved marginally in August. The General Business Conditions Index rose several points to 2.8 after posting negative figures for the last 3 months. The mid-month UMich survey of consumer confidence for August rose slightly to 61.7. Consumers' views of current conditions declined, while their future expectations brightened. The 12-month forecast for inflation cooled from 5.1% to 4.8%, as consumers factor in the recent fall in commodity prices. The euro-dollar pair broke below 1.47 in New York trading, capping another week of strong gains for the greenback. To start the week, the pair fell below key support at 1.50, which then turned to resistance near 1.4950. That resistance held in the middle of the week as the pair consolidated. Dollar bulls used yesterday's higher-than-expected U.S. CPI data to start a rally, and it continued in today's New York session, following another batch of better-than-expected fundamentals. The dollar rose against the yen overnight as well, capping a 200-pip rally over the last 3 sessions. It met resistance near 110.65. Oil prices were down again today, dipping below $112 per barrel, and U.S. stocks were in the green. Falling oil prices have been a major catalyst in the dollar's recent revival. In Canada, manufacturing shipments rose 2.1% in June, higher than expected. It's the 5th increase in 6 months and showed widespread gains. In a separate release, June's sales of new motor vehicles were lowered by 1% for the month. Sales of new trucks fell as consumers switched to passenger cars. The US dollar-Canadian dollar pair plunged 100 pips from its intraday high to test 1.0580, with a good amount of it coming in the wake of the shipments release. The last 3 peaks in the pair have come in successively lower highs, forming a new line of resistance as the pair consolidates this week. It will be interesting to note if a downward channel develops or if the greenback strengthens again next week. Next week starts with the housing prices from the UK, sales data from Switzerland, trade figures from the Eurozone, and producer prices from New Zealand. Monday evening, Australia posts its meeting minutes, and the Bank of Japan will conclude their interest rate meeting. And that wraps it up for the week in Forex News. Join us again next week right here at cmsfx.com.